Hello, I'm Dale Schaefer, founder of Life Moves Wealth Management, and today I want to take a couple of minutes to introduce you to our one-page financial plan and the process. The one-page financial plan we use is through Elements, which is our chosen platform for financial health monitoring. Financial health monitoring is financial planning, but in real time. We use a one-page financial plan because I found over the past few years that nobody wants to read a 30 plus page financial plan. They tend to have a lot of assumptions that we know are going to be wrong. There's too many pages of numbers and graphs that seem confusing, and there's too many disclosures that basically state that the firm's not responsible for all the assumptions that could be wrong. Thumbs down. So we simplify the process. One page financial plan, make it easy for you to see everything on a dashboard like format. Makes more sense. You can see how your financial health is moving in real time. Now, new clients always want to know how the one-page financial plan works, and rather than saying, you'll find out in the process how it goes once we get you signed on, let me just show you what it looks like and give you some insight into how I see the one-page financial plan, how we use it, and more importantly, how you as the client of Life Moves Wealth will use it. So let's check it out. Financial plan for Sally and Sam client, my sample clients. And as I scroll, you can see that it truly is just one page of information, and it's only the most helpful and easy to digest information that's on the layout. So let me walk you through the layout and then also help you get a glimpse of how I, as the advisor, use the one-page plan to help deliver financial advice, and how you as the client will use the one-page financial plan to answer the two questions that everybody asks me, which is number one, am I going to be okay financially? And number two, what do I do next? And throughout the year, the one-page financial plan will help you continue to answer that question, which becomes very important because as short as a year can be, when you're in the middle of that year and you've got a lot of things going on, it's helpful to have something you can look at and see the progress that you're making and what you want to continue working toward. The very first thing that we're going to look at on the one-page financial plan is on the left, which is the statement of financial purpose. As a client of Life Moves Wealth, this is going to be one of the first things that we do together. Once you decide to become one of our clients, we're going to work to identify your values, what's most important to you about money, and why those things are important, because that's how we're going to make sure that all of your financial decisions are aligned with the right things and are still moving you in the direction that you most want to go for yourself. We did some work with Sam and Sally in this case to understand where they are. Now, Sam and Sally are business owners. Their children are in high school. And so what's becoming most important to them at this season of their life is to prioritize time together, outdoors, seeing new places. They want to promote good health and they want to avoid overworking, which as a business owner can be very difficult to do. So they're trying to be very intentional about how they're using their time. And as the advisor, that's what I read. Intentional about the use of time and resources. And then they want to also give back to their community. So our financial plan, the goals that we set, and the next steps, which you can see on the top half of the one-page plan, the goals and the next steps need to feed the financial purpose. So you can see the goals that they've laid out, which go over here on the right. These are all the things that we're working toward, and then you can see the next steps. Now, Sam and Sally have already taken some next steps toward accomplishing their goals. And once we get to those milestones, then we simply cross each of these off and they can feel like they've made some progress. If a goal is not getting accomplished, then we need to go back and make sure it's still the right goal, or we need to reevaluate our next steps to make sure that we're feeding each of the goals with an appropriate next step. Now, scrolling down, the next thing that you see is a net worth over time progress chart. We started working together about 60 days ago, and they've already made some progress in their net worth, and they continue to save, and the market's been a little bit helpful over the past 60 days, so they've seen the benefit of that. Underneath that, we're going to have a quick snapshot of their annual income and their annual expenses. Now, the annual income is going to be the fixed amount of income that you're receiving. It probably doesn't include discretionary bonuses or profit sharing that may or may not happen throughout the year. If those come in, then we find a way to make sure that money gets put to good use. But we want to have for our income number a defined amount of income that we can rely upon, because it's an important part of the equation for a lot of the financial health indicators that we see below. Now, the other part of the equation is going to be annual expenses. In your Elements app on iOS or Android, you'll go in and put in your expenses throughout the month, and that's going to include everything. So that's going to be things like mortgage and car payments and business loans and credit cards and other things like that that have a defined payment. Then you might also have tax expenses. You're going to have insurance premiums. You'll have your utilities and your groceries and your dining out and gas in the car and travel, things like that, things that we identified as expected expenses go in there. Now, in Sam and Sally's case, as the advisor, I'm going to look at this and have a question to be sure that we have the right amount of income and also that we have the right amount of spending. So this number that we see for spending might be a little bit low based on their income, and so I'm going to ask some questions to make sure that everything's accounted for. And if everything is accounted for and these numbers are correct, then the next thing that I'm going to see is the same thing you're probably seeing, about $100,000, a little bit more, of available money on an annual basis, so a couple $1,000s a month, that we can work with to start helping them accomplish some of the goals that they want to get through by the end of this year. They want to increase their cash reserve to 40,000. They're about 12, 13,000 away from that now. They want to increase the savings rate to 15%. They have it at 13% right now, which you can see in the savings rate box. When we started working together, it was at 10, but you can see that they both increased their 401k contributions, and we did some work to understand what an increase in their 401k contribution would mean to things like their cash flow and their savings plan and business profitability and other things like that. So they also want to increase business profitability. Sally would like to make profit sharing contributions to herself and to her 2 loyal employees. And then they also want to put some money toward saving for half of the expense of undergrad for their children, Samantha and Sarge. And so, as you can see, our next steps feed that. If that number is correct and there truly isn't $100,000, then again, we're going to go back and make sure that we have these here, and that becomes very important, because if these numbers are not correct, then nothing in our financial health indicators are going to be correct. So we want to be sure that is as accurate as possible. When we're looking through the financial health indicators at a high level, just to help you understand what I see, starting here in the equity risk box, which is the green box, 64% of their investable assets are exposed to the stock market. I know that that's roughly a moderate risk tolerance. We know that their insurance coverage, which is going to be life, disability, liability, and long-term care, we know that about 92% of their needs for those are covered. Will it get to 100%? I don't know, but that's something that we'll work at over the next few years of planning, just to make sure that we have the right amount of risk coverage. We already talked about their savings rate. It's at 13%. They want to get it to 15%. We might have the ability to increase that just with the amount of money that exists between what they earn and what they spend. Now we know that their burn rate is 39%, and the burn rate is what you're spending above your fixed payments for things like the mortgage and the car payments and the business loans and that kind of thing. So they're spending about 39% of their income. We can see that they actually could either spend more or they can increase their savings rate. I know that their debt rate is at about 18%. That looks like a healthy number to me. So we're just going to make sure that the debt that they're carrying is appropriate. In Sam and Sally's case, most of their debt are 2 car payments, a mortgage. Sally has a mortgage for her office space, and so that's all healthy debt. They've got a little bit of credit cards, but not enough where we're concerned about that getting out of control, and they could actually just very quickly pay those off with the cash that they have on hand and not have any detriment to their savings goals. I know that their tax rate's about 21%, which for business owners, that's pretty darn good. But I'm going to do some tax planning and I'm going to work with their CPA to be sure that they're withholding at the right amount and that the tax percentage that we have accounted for is indeed correct. Next, I'm going to look at their liquid term, which just tells me that as of right now, based on what they are reporting for spending, the cash that they have on hand could fund 6 months of their spending if they got into some sort of an emergency and nobody could earn income. And so that's a number that we're going to watch. For some clients, 6 months of emergency cash or expense coverage is appropriate. For some clients, they can work with a little bit less, and for some clients, they need a little bit more because maybe their income is variable and highly variable at that. Next is their qualified term, which tells me that if they had just their retirement assets to live on, they could pay for almost 3 years of their expenses. So we have some work to do there, and they're continuing to save, and that number will grow with time. Based on the equity that they have in their real estate holdings, which is their house and Sally's office, if they sold both of those properties, the equity from those two properties would fund about 5 years of their current expenses, which is pretty good. Business term is going to be the value of the business that they earn or that they own. If they were able to sell the business, all the assets, the client list, the accounts receivable, all of that has a value. And currently that value could fund about maybe almost 3.5 years of their current expenses. And most importantly, what everybody wants to know when they do financial planning is, when can I be done working for somebody else? When can I be financially independent and start earning on my terms if I want to? And basically at this point, their total term is if they had to sell all of their assets, cash out all their investments, they could fund a little more than 9.5 years of their current expenses and still be okay throughout that period of time. So there's your quick flyover of the one-page financial plan, and you were able to see what's on the financial plan, but most importantly, how we use the data on the one-page financial plan to continue to help you on an ongoing real-time basis make the right financial decisions to continue accomplishing your financial purpose and what's most important to you about your money. If you have questions, or if you'd like to get started with your own one-page financial plan and ongoing financial health monitoring, reach out to us today to get started. Take care.